Welcome to this week's market update brought to you by coffee. Not any particular brand, just coffee. And the construction noise in the background too. They're moving some heavy stuff around, so sorry if you hear that. Anyway, today we're going to be talking about what Wall Street has been doing in terms of the housing market. And we're going to be diving right in after this sip. If you're not familiar with the thumbnail in this video, it's from, here, let me pull it up, the World Economic Forum, and it's particular from their Great Reset video. What they had was where they envisioned this sustainable and equitable, again, this is from a very technocratic point of view, take on how society should look after COVID-19, essentially. And this got a lot of flack from the internet because it was essentially predicting a future where we're not going to own anything because it's not going to be affordable anymore. Not because we're, cast all the meaningless consumerism behind us, but in particular that things are going to become so expensive that the individual will no longer be able to own anything, including their own house. So that's why this thumbnail is apropos to what has been going on with Wall Street. And if you've been living under a rock, BlackRock and Citadels have been, featured in the news heavily as buying up huge swaths of subdivisions in America. During last year's housing frenzy, BlackRock and Citadel were one of 200 institutional investors going on the house hunt, and they were competing with the individual homebuyers. And of course, this translated to them outbidding many of the homebuyers, and it was seen or forecasted that essentially all these mega corporations and Wall Street institutions would own all of the available property and essentially just rent it out back to us instead of being able to fulfill the American dream and start building equity in terms of your paying off your debt on your house, and thereby using your house as a forced savings account. Luckily, Wall Street didn't quite wrap its fingers around the Pacific Northwest, but in certain states in the Sun Belt, they certainly did. I mean, the sheer scale of it, they were buying up whole neighborhoods, and that reduced supply, housing supply significantly, raising the prices of the existing house because of the bidding wars. So just because somebody lost out on a house, they say, okay, find the next house, but that increased the price of making housing affordability even less in certain markets. So anyway, let's see what's been happening since then. As you probably know, the housing market has changed considerably, and that has caused a big problem for Wall Street homebuyers. Let me share a graph made by Venture Consulting. Let's just pull it up here and enlarge it. Here we go. So basically this bar chart shows how much capital was raised for single family rentals via mortgage-backed securities between Q3 of 2020 and Q2 of 2022. Basically, it shows that $32 billion was raised by Wall Street homebuyers during this time. Now let's see what's happened since then. As you can see, this little tiny green bar chart shows that only $3 billion has been raised in the last 3 quarters. And that is a huge difference between what you saw here and what's going on here. So the people who are investing are no longer seeing single family rental properties as such a cash cow. If these single family properties cash flow negatively, or just perhaps cash flow less than holding a 10-year treasury, then we can assume that these Wall Street institutions will probably start offloading the inventory that is costing them money. To illustrate this point, I'd like to share a map made by that consulting company, again, it was a Venture Consulting, of Phoenix, Arizona. Thank goodness this isn't Tacoma or Gig Harbor, it's Phoenix, which is in the Sun Belt, and which in the Sun Belt saw a lot of investor activity. And to illustrate this point, we can see that this is a map of percentage of homes purchased by investors in 2022. So these little percentages are for each zip code. So for example, this one next to Youngtown here, 51% of houses purchased by an investor. So if we can assume that so that's half the housing stock purchased in 2022. If those houses now get unloaded as just part of a spreadsheet exercise, what do you think is going to happen to all the housing prices and the amount of supply hitting the market? It's been forecasted, let me just remove my picture so you can see the whole screen. It's been forecasted that Wall Street might liquidate starting in mid-2023, particularly in housing markets such as Vegas or Phoenix, where we can see that rental vacancies have skyrocketed. Here we see the low, let me zoom in a little bit, there was a low of rental vacancy here, 3.2%, and that has more than doubled to 6.7% currently. And so of course, when you have a vacant home, not only do you lose the positive cash flow, but you also have to pay holding costs such as utilities, you got to pay the taxes, and you have to pay insurance. So all that can make owning a single family home kind of a money pit real quick. We've seen a pretty quick change in the Wall Street will own everything, and the you won't own anything, you'll be happy kind of narrative going around the internet as interest rates have gone up. And let's take a look at that now. This again is, I'll add myself back into, there we go. Again, this is a graph made by that Venture Consulting, and it compares cap rates, which you can think about as like a dividend on a property. Let's just keep it simple like that. And we can see here mortgage rates in orange, which have spiked since the Fed started raising rates. And it says 6.4% here, but I think it's gone up since the last jobs number, as I predicted. But basically, that's beside the point. Here we see a huge gap between the green and the red. And this gap here, with the red being on top, or mortgage rates, basically means that investors are losing money on their rentals after paying their lenders. So of course, when you own a investment, you hope that investment's going to pay you back money that you put into it, and that's the whole point of investments, right? So, would you own something that costs you money every month and you don't get any joy out of it? Probably not. From an institutional standpoint here, as their shareholders say, hey, why are we owning all of this housing stock that is actually costing us money instead of making us money? I'd like to end this week's market update with a quote from Nick Gurley, who is the CEO of Venture Consulting. And he says, quote, "There are still lots of delusional groupthink in the real estate industry. Investors, realtors, and flippers haven't realized that we've entered year one of what's likely to be a 5-year housing downturn." And he goes on to speculate that once Wall Street buyers use up their $32 billion in capital from the 2020 to 2021 capital raises, they will need to start selling houses to keep their acquisitions business going. And that's when you'll see them, which I assume he means investors, realtors, and flippers, start acknowledging the realities of the housing downturn. I just want to quickly here go over this Redfin article that was released 2 days ago. I can feel the floor shaking and vibrating. Basically, it says investors are buying roughly half as many homes as they were a year ago. This was 2 days ago, written 2 days ago. And so you get the headline. So here we see investor purchases year-over-year change, and of course these are mostly Sunbelt cities. We see New York here, and Sacramento I wouldn't count as Sunbelt, but it was the cheapest housing, I guess, in a metropolitan area in California. Basically, you can see that a lot of investors have dropped out of the game in these areas. But because we are in the Pacific Northwest, I just want to cover that real quick. So despite being in Gig Harbor, we have to use Seattle data. Basically what this is saying here is that investor activity has dropped by 42% in Seattle, but Seattle only sees less than 10% of home purchases by investors. So we in the Pacific Northwest aren't as exposed as some of these areas that see plus 20, here's 30% in Miami. Like, these places have some incredible investor activity. And I promised to talk about why investors really don't focus on the Pacific Northwest or the West Coast. And that's because the West Coast and parts of the East Coast are appreciation markets, not necessarily cash flow markets. The Midwest and the Sun Belt is known for cheaper housing and relatively modest rents, where the rents actually already cash flow year one. And of course, probably not anymore after the surge in housing prices. But in the Pacific Northwest, it's really hard to find a house that will cash flow in year one. Usually what happens is you buy a house, it can, break even or maybe even lose a little bit of money. And then once you get into several years down the road, the value of the house is appreciated. So it means you build equity, but not necessarily cash flow. However, if you hold the house long enough, rent rates do generally go up, and then it'll start to cash flow, after a few years of holding. So that's why investors really don't like the West Coast when compared to these other markets, because they want to see that cash flow immediately. They don't have that long-term game plan, nor do they really care about equity. It's more about getting that immediate paycheck into the bank to pay off investors. Anyway, that was pretty much the market update. Okay, let's get on to Gig Harbor's market. Let's see what's been going on in the past couple days. Let's just reset all the filters so you can see how I search. So you can see there's a lot of stuff out there, but we can pare it down relatively quickly. Let's just draw our outline. Through Vaughan, include Fox Island. Okay, apply. Then we're gonna take out new construction, home type. We're gonna remove all the lands and other stuff. We're just looking at resale houses, and then we're gonna turn on date on sale to 7. Okay, 7 new listings. It's not a lot. Let's include what went under contract, but it was also on the market for less than 7 days. So these are houses that flew off the shelf. Price high to low, and oh, look at this house. Raft Island, south facing. Look at that property. Ooh, 2.8, man, somebody was anxious to get that. You get all of this. You get your own dock / pier. Look at this retaining wall. Kayaks. Whoop. And then you got this entertaining area. Let's see. Oh, I gotta see the entertaining area. That's nice. Look at that. Got a loft, his own kitchen. Pretty sweet. 3 bedroom, 5 baths, probably limited by the septic. The house isn't, that awesome, but I think it's the property. Just the property itself is fantastic. That is medium bank waterfront. Soaring ceilings, soaring ceilings. One of a kind boathouse. That's that. Full kitchen. Okay. Gourmet kitchen. Yeah, I can see why. I can definitely see why somebody would stick $2.8 million in less than a week down for this property. Wow, phenomenal. Anyway, I think I'm getting beside the point. Anyway, so that's $2.8 million. So if you're looking for waterfront with that kind of amenities, look at the competition. I mean, there's people with open checkbooks that are looking for the perfect waterfront. So there is competition for this price of house. All right, what else we got? Okay, let's look at our medium price property. We got a couple of 600s here. And we got, our lowest, let's look at our lowest priced house, which is another beach cabin or boathouse. $350, 1 bed, 1 bath. Now I looked at this before, but I didn't recall seeing a bathroom. Maybe it's an outhouse. This doesn't qualify as a bathroom. They didn't take a picture of the bathroom, okay. But look at these cool old photos they got, huh? That's pretty grainy. One was first built, probably built by the owners too. They didn't hire out subcontractors or contractors. Look at that nice view. So for $350, you can live just a short walk down the hill, boop, 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 down to your on the water beach cabin. And you can no longer build on the water. So these are grandfathered in, and if you do buy one, chances are you can only put a new structure on the existing footprint. So this is what this person did. But yeah, if you want to check this out, it looks like a pretty sweet location for $350. You're basically buying land at this point. Yeah, huge potential. A weekend getaway house, big potential. Cool. Well, that's $350. You can live on the water. So either you can live on the water for $350 or $2.8. Your choice. Okay, our last house. I like to do median price, but I don't really see a median priced house here between $830 and $600. Let's go to the one that says pending. Let's just go for the one that's still active. 3 bed, 3 bath. Let's see where it's located. Didn't quite look. Okay, yeah, this is one by the Veterans Memorial Park. So if you have kiddos, that's a very convenient location. Or dogs too. I see a lot of people with dogs on this playground or park. A nice location, close to shopping. That's probably why they priced it at $600. I'm probably priced a little bit high. It has almost an acre, just shy. I think the thing with this house, it doesn't need an interior update. So my gut says maybe less than 600, just because of the, you need basically everything new to be modern. Look at this nice brick entryway. Popcorn ceilings, old carpeting. Oh, wallpaper, ooh, that's a lot of work. A tile bathroom will probably need to be redone. Probably an old shower tub. Look at that whole toilet, interesting. Yeah, look at the light fixtures, popcorn. This house will need some updating. What is it? What's wrong with this light socket? The outlet. Interesting. Yeah, this. I had a house with these. Well, I still have a house with these windows, and what we did, we just went all the way down to essentially where the electrical was, and just made these nice, big, generous openings. I would put the bed here, and nice big opening window. For some reason, there must have been like a window tax or something back then. I don't know why the windows are all small from the 70s. Look at that wallpaper. Beautiful. The flooring looks in good condition, so at least you can spare yourself with that. Oh boy, this is one stylish bathroom. Yeah, 600 seems high for the amount of cosmetic work this house needs. But you know, if you're looking for a house and you just need to get your family in, this is definitely a good option for you. Just, you know, I would say $550 would be a comfortable price I would put on this house. Yeah, it's a nice little gem. Needs a little bit of polishing, but look at the garden. It looks pretty nice. Anyway, that's it for this week's Gig Harbor Market Update. You saw what's in the market. You saw how expensive or how cheap waterfront can be, and you saw how much it costs to live in a convenient location for your kind of middle-class family. There's another. Oh, that one's already pending. Okay. Anyway, I can talk about this stuff all day. I gotta go. I gotta edit this video and get on with my day. So I'll check you next week.